Okay, I'm going to do a couple quick videos over the weekend prior to paper 2 on Tuesday. Been away a week, but thought, why not? Let's do a couple vids. Let's focus a little bit on essays as well. Apologies if I'm a bit croaky, a bit of a cough. Decision-making essays. So what I'm not actually looking at the specific essays in this video, but just more some of the key terms you could use within them, and so we'll talk around them. So decision-making essays are 3.10 in the syllabus. You can look at make or buy. That came up a couple of years ago with the scissors essay. So when you're looking at make or buy, you're reviewing whether you should continue to produce in-house or to outsource. Now, the way that can be asked can be tweaked. Look at the scissors question from 2023 to see how they did it. But usually, you'd be looking at make or buy as in a cheaper alternative to buy from abroad rather than make in-house. And then you look at the quality benefits or the ethical benefits of continuing to manufacture yourselves. That one was more about trying to fulfill an order. So it just shows how you can combine some of these elements. Closures, one of my tips, it could be a closures or additional order essay this year, but closures look at the idea that you're going to stop producing a particular product or stop running a particular department because they're making a loss, and then there's a lot of discussion around that. Some of the key terms we go through today will link to that, but I'm going to try my best to do a video on closures as well. Additional orders, you have a one-off order from a customer. Should you take that order? There's lots of different elements to that question usually. Scarce resources. So I've done a video on numerical for scarce resources, but I've got in my head that they could have an essay on this. So I'm saying about closures, I have no idea what's coming up. Scarce resources could be an interesting question. So you'd have to calculate the most profitable production mix based on a limited resource, be it material or labor. They could give you different variables as to how that would impact customers, or there's an alternative supplier, or you could outsource a certain amount of production. I could definitely see them doing that, and then that combines scarce resources with an element of additional order or an element of make or buy. I think we're 5 or 6 years into the syllabus. They like to combine things because they get a bit bored. They don't want two similar questions. The essays, in particular, they don't want you guessing it. They don't want you. They want you to be applying your knowledge. So that's something you could be thinking about. Target profit in itself, the essay wouldn't be target profit, but it could be that's the focal point. So you're trying to achieve a certain amount of profit or a certain percentage profit. That's a lot of your analysis is around there. Price setting is also there. Now, price setting usually comes up in a comparing two costing methods, so absorption costing, activity-based costing, or marginal. Last year there was an essay on marginal against absorption. That definitely does not mean it won't come up this year, but there's less of a chance with the amount of scope for essays in paper too. But make sure that you can attack that. The responses on that last year were poor. Lots of students are leaving that particular essay blank. You can't afford to leave a 25-mark essay blank. Anyway, we're going to look at some key terms. And what I'm going to do, define them. Some of them you're like, oh, yeah, I know that key terms is easy, but it's not about that. It's about how you could use them. So sometimes you're not being told define this type of cost. It's just you use that type of cost within an essay, and then you try and think around the limitations of the points they're giving you and questioning the points. That's what we're looking at in a solid level 4, level 5 essay. You've got to be questioning the evidence, thinking about the wider context. If you look at the mark schemes, it says the wider context, but also a wide range of points. But anyway, we kickstart with variable costs. Hopefully you're not in the position where you just say variable cost or costs that change, because that's not a definition of variable cost. That's a definition of any type of cost. All costs change, whether that be in the long or short term. A variable cost is a cost that changes directly proportional to output, so in line with output. So what we're saying is it's linear. So the idea is that the variable cost per unit, if it's £2, you'd pay £2 per unit if you're producing one, or if you're producing 10,000 units. So that stays exactly the same. So when you're within an essay question, you can be using that idea and just keeping it the same every time. So £2 per unit. If it's 10,000, it's 20,000. If it's one, it's £2. I don't know why I'm showing you that calculation. I don't know why I'm talking through that, but that's where the question mark comes in, which is where we need to get to. So if we're in an essay question and it's talking about increasing or decreasing production, that can have an impact on your variable costs. Well, you've got to think about economies of scale. If you're not sure on the term, it's just the idea that your average costs will decrease as production increases. So the idea that if we produce more, we can reduce our cost per unit. So if in a question you're looking to increase production, you can say, well, actually the variable cost per unit might reduce because they'll get purchasing discounts or because they get more efficient, or they spread the fixed overheads. We're not going to get fixed overheads. We'll go there in a minute. I'm getting too excited. With the variable cost, anyway would be reduced due to the fact that we're more efficient and that we would be purchasing more. Conversely, if we're producing less, then that would have a disproportionate impact on variable costs, and so it's going to have the other way. So we may not achieve those discounts. So it actually might be more expensive on a variable cost per unit. So don't just be straightforward. Oh, the variable cost is this, that's it. Question it. Use that as part of your analysis. And so obviously that would have a direct impact on the contributions that we can make. So variable cost is a lot you could say about. Fixed cost is the big one. If you're completing a decision making essay, so you don't write about, really analyze fixed costs, you're missing a trick. Fixed costs is a definition. They're not costs that don't change. That's not what it means. Costs that do not change in relation to output. Now, what we go with is we use that theory in your essay. You go, oh, fixed costs don't change. So if we close the department, we'll still have these fixed costs. Can we cover them? Fixed costs don't change. If we take this order, it doesn't matter. There's no additional fixed costs, so we should make more profit. The general principles of fixed costs should be there. But again, like with variable costs, question that idea. Fixed costs do change in the long term. Fixed costs do change if output goes to a certain level. Now, that goes into another definition in a moment, but the principle of fixed costs, just question it. If we close a department, could we save on some fixed costs? Will we have less supervisors? Will we have less maintenance on machinery? We don't know that potentially, or it might be inferred in the question, and so we question it. If they say, oh, fixed costs will be saved as a result of closing or as a result of doing this, we question that. Is it definite? Is that really going to happen? Is there a potential it could be more? Is there potential it could be less? So we really question the abilities of the fixed costs to change, because the likelihood is they will. In the longer term, if you make a big decision, fixed costs can change. With an additional order, quite often talk about the fact that you might need overtime. So you've got this big order in a short period of time, you might need to offer overtime. That is a fixed cost. Overtime is not a normal cost that a business would have. That would be in the fixed rather than variable cost, because in variable cost we'd have our standard variable cost per unit for labour. So question those fixed costs and whether they would change, and more importantly, how that would influence your decision. And then we go into step cost, and really it just links into what we've just said. But a stepped cost, if you need to define it, is a fixed cost that stays the same up to a certain level of output, then increases to the next fixed element. So to use that numerically, so you could pay a certain amount up to 50,000 units, and then it goes up in increments of 50,000. So the minute you go 50,001, we got to the next increment. So if it was 100,000, you pay 100,000 for 50,000, but then it will be 200,000 for 50,001, and that's everything up to 100,000 units. And so we've got that stepped element, and that's something which we could use as a key term when we're linking it to fixed costs. If we're talking about increasing or decreasing output, are there any step costs involved, which means that we could potentially reduce or obviously increase our fixed costs. So make sure you can differentiate between these costs. We also have a semi-variable cost. Doesn't come up as often, but then that's not necessarily a sign that it's one we're not going to use. But a semi-variable cost is a cost that combines a variable and fixed element. So electricity has a standing charge that's fixed. No matter how much electricity you use, you've got to pay that. Then obviously your usage determines the variable element. So if you're within a decision-making essay, obviously the fixed element may not be relevant because it probably won't change, whereas the variable one will be relevant because it will change in line with what you do. So semi-variable cost is a cost that combines a fixed element, which will stay the same regardless of output, and a variable element, which will change in line with usage. So semi-variable costs, yep, could be used. Direct cost. So yeah, you'll see these terms quite a lot. Direct costs and indirect costs are more in a absorption costing, but they could be anywhere, obviously, but they link to absorption costing because absorption costing differentiates from the direct costs, so the costs that are directly related to the production of one unit. So that cost, we can get back to that one unit. So if I'm making this calculator, which you can't see because I've blurred the video, it's all the direct costs. So that'll be the materials, the production labor. I can say exactly how much I use to produce one of those. It does not include any overheads because we cannot specifically say how much of that overhead is for one unit of production. So if we're using direct costs, it's literally that, directly related to the production of one unit. Whereas we're reviewing indirect costs, what we're saying here, indirect costs are overheads, and so indirect costs are any cost that cannot be directly related to the production of one unit. Now, I haven't said as much for these two because let's be fair, direct cost is essentially a variable cost, so it's just another term we can use, and an indirect cost is essentially a fixed cost because they are overheads that are unlikely to change. There may be variable elements in them, but when we're talking about output, they don't change in line with output. So indirect cost. Marginal cost. So marginal cost is the cost of producing one additional unit. So if we're talking about marginal costing, effectively we're talking about variable costs. When we look at marginal costing ignores fixed costs. They go, well, fixed costs already happened. They're being paid for. They're not relevant. So we'll look at the marginal cost. So what is the variable cost of producing this item? How much could we receive for this order? And then work out a contribution. So marginal cost, that's all it's looking at is variable. Contribution is massive. So you need to use contribution. You're going to be talking about this a lot in your essays. If you don't, I mean, obviously it does depend on the essay, but it is highly unlikely that one, if not both of your essays or a lot of your 6 markers will link to contribution. So the calculation for contribution, the selling price per unit, take away the variable cost per unit. So how much that product contributes towards those fixed costs. And so when you're questioning contribution, you're looking at the factors that would influence it. So as part of your analysis, if you're saying variable costs are going up, then that's clearly going to reduce your contribution. If we're saying selling prices are going up or down, clearly that's going to influence contribution. When we're calculating contribution, can you please remember that it's any variable cost. So variable overheads are included when we're calculating contribution. I think we had that with the scarce resources video. So contribution will be really important if we're looking at additional orders, if we're looking at make or buy. And if we're doing that, can you please make sure that you are focusing on the variable costs? So sometimes when there's a make or buy essay, people take away the fixed costs in the make option and say that's the contribution and compare it to buy. That's not the way it goes. Those fixed costs generally not relevant because they will usually still exist, but equally just the idea of contribution is different. Profit per unit, you can take away all the costs. Contribution, selling price, take away variable costs. If we're looking at a closures essay, so if you've got a closures essay, which obviously I'm obsessed with, you could be reviewing, or you should be reviewing total contribution. Because we don't look at it at an individual level now. We're talking about closing an entire department or product. Now, they could tweak it, but the likelihood is you're going to look at the total contribution of that department. Because you're going to be saying that department's making a loss, and then you've got to discuss that and the legitimacy of that loss. And there's lots of things you can do. But the other thing is the contribution. So the contribution that department is making towards those fixed costs. Can we actually replace that contribution with another product? Because if we can, then financially we're not worse off. If we can't and fixed costs stay the same, we're losing out on money. So total contribution to our total revenue, take away our total variable costs, is something else to be considering in these decision-making essays. Also, break even. Break even can really support a decision making essay. So you can calculate it if you know your unit contribution, because we can go fixed cost divided by contribution per unit, and that will tell you the amount of units they need to sell to break even. And then if you know how many they're going to sell, you can work out potential profit. You can question that profit, the legitimacy of it. It's great. There's loads of analysis to do. So break even can be really good. Don't get too obsessive on one point. I've read essays before where people have done 2-page essay and pretty much all of it's on break even. You're going to really limit your mark if you focus on one area. Wide range of points, but break even can be used to strengthen an essay. So a make or buy, additional order, that could definitely work. Something linked with target profit, scarce resources, even it can work everywhere, but use it in an individual paragraph, but don't focus everything on it. And if you're looking at break even, you should be looking at margin of safety. So if you've got a break even figure, you've got a sales figure, work out your margin of safety. So margin of safety being the difference between expected sales and break even. If we've got a high margin of safety, that means we've got a big buffer between our break-even point and our sales, which means we've got a high chance of making a profit and a lower probability of making a loss. Anything that shrinks that margin of safety means we've got a higher risk of making a loss, and that's something that will have to be factored in when making our decisions. And obviously the same with break-even. If break-even gets higher, that means it's more difficult to achieve. We talk about the problems there and link it into margin of safety, and if it gets lower, it's more difficult to achieve and a high possibility we make a loss. So we're just using these terms in order to make a judgment. Each of them individually doesn't give you the judgment, it's a combination of all of them. Anyway, decision-making essays are great. They're a good way of highlighting your technical knowledge. You need to show these terms, not all of them, obviously, but you need to show these terms in your essay. You need to show the examiner you understand what they mean. So don't be afraid of just being obvious, but then you have to question it. Don't be too obvious. It's just a level 1 or level 2 response because you just show knowledge. Actually apply it to the case study, show you understand it, show you link it to the question set. Okay, good luck.